Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. And Scott, the markets, I think, are in vacation mode. We're up about 2 handles. Relatively quiet news weekend. The only thing really going on was the infusion of capital, about $400 million in tonight. And we have Bernanke speaking at 9, so it looks like a relatively quiet day. I feel like we're in that slow 2-week, 3-week grind into the end of the summer.
Well, I think traders and market participants are worn out.
Burnt out, right.
Like last week, you had an event after an event after an event, and we closed near the highs of the week, and we closed right at resistance. And I just want to quickly show you the chart of the S&P because we've been trending ever since this June 4th low. Since the June 4th low, we've been following this ascending channel all the way up, pretty much climbing the wall of doom, let alone the wall of worry. And here we are at the highs. I think if we could do some work above 1388 in a quiet, sleepy summer few weeks, we could easily work our way well over 1400 in the S&P.
Right, I think you're going to see some of that really thin volume, but that slow, methodical move up. But one thing that we do here at T3 and at The Street is pick out some identifiable trends, our haves and have-nots. In the sector spotlight, we're going to take a look at healthcare. There's some names there that are starting to make that move out and outperforming, and then we also have some that are underperforming. Healthcare costs are really key within this group, but think about it. Everyone in Washington, D.C. is on vacation for the next 5 weeks because we have nothing to fix, right? So we can actually take a look at these stocks for what they are, and some of the political headlines are out of the way. So let's look at the XLV. Is there anything there like within the ETF?
Yeah, well, you mentioned it before. I looked at the chart, and I don't trade these names as in focus. So, but I look at it now. I'm like, why haven't I? You take a look at the chart here, you'll see that. Look at this. We're right near the highs of the overall year. This is your level on the XLV above 38.90. You get a breakout. You take a step back and look at it, and it's methodically been going to the upside this entire year. So within this group, I'm sure there are stocks that are giving you some alpha. So at this particular point, it goes to show you there are a lot of vehicles out there, not just tech that we talk about. We've been talking about ags. We've been talking about, you name it, there are leaders. And in this group, I think there are also some opportunities.
Right, especially like what we've been talking about with the ags essentially since November 2011, knowing that there was some trickiness, but it really got on fire in Q3 and Q4. So I'm thinking there's a couple names within the healthcare space. Speaking of have-nots, how about Facebook and the social media space? Stinkers, huge disappointments.
Well,
that's a technical term, by the way, a stinker.
Yeah, stinker. Well, last week we saw LinkedIn. LinkedIn actually had a big move. It held high. Everyone said LinkedIn's going to be dead because Facebook can't find a friend. Ooh, another pun.
Ooh, I like that.
And at this particular point, if you look at LinkedIn, LinkedIn looks really good. With a little bit of time, I think you can be a buyer of this above 110. Like you said, Facebook put a small, very small little bottom or double bottom here in this area. I think traders will be looking at this 1990 area as a new point of reference. Maybe it goes sideways, you get some trades there. And that's our point of reference. Everyone says now it's going to go to 1516 tomorrow, so now maybe it actually bounces a little bit.
Well, one of my reporters over on the flagship side had a headline, "It's partying like it's 1999," and it did. It was a teenager for a bit there. Yes. Moving along, let's wrap up the Morning Call Express with everyone's favorite name to trade, Apple.
Yes, Apple gave you a beautiful entry above, what was it, 580.80 after earnings, gave you another one, and now if you look at the chart here, it looks really good. You know, I've been long it since last Wednesday, right when it held this gap right around here besides trading it, and now it's trying to break above this 617, 618 area. I think if this stock can get above 620 today and close above it, this will be one of those stocks that just grinds higher over the summer, and your level here is 644, and I still have a target well north of 700 this year.
All right, guys, have a great week trading. For those of you who have not signed up yet, meet Scott and I tonight at The Street's Meet and Greet. Details on thestreet.com. Have a great week, everyone. Catch Scott at the end of the day. Real Money, T3Live.com, and Options Profits as he wraps up the charts.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.